In our episode revision 15, let us quickly revise the expected questions in the board examination under balance of payments. What is balance of payments? Sometimes the definition is asked. So we need to write it's a statement of accounts. This is very important. It's a statement of accounts of a country's inflows and outflows of foreign exchange in a fiscal year. Right? Now, what does the balance of payment record? There are so many questions that are asked based on this. What does it record? Okay, like where will you write this particular transaction, whether in the current account or in the capital account, because those two are the components of the balance of payment, right? So we have a current account and we have the capital account. So we need to be very sure of where these transactions are recorded, whether in the current account or in the capital account. The current account deals with trade in goods, services, as well as transfer payments or unilateral transfers. So all three will be included under the current account. Trade in goods, services, as well as unilateral transfers or transfer payments. The capital account deals with all the international transactions of assets like stocks, bonds, etc. Okay. Now each account will have a debit side and a credit side. We do understand that a debit side, will record all the outflows of foreign currency, and the credit records all the inflows, whether it is in the current account or in the capital account. So payments for goods and services, that is imports, these decrease the domestic demand for goods and services. So if there is an import, it will be recorded under the debit side of the current account, right? Then inflows are factor incomes from abroad or exports. So if any question is asked, like we buy a mobile phone from some other country, then where will it be recorded? So since we are buying it, there is an outflow of the currency, domestic currency. So it will be recorded in the debit side of the current account. Mobile phone is a good. So it will be recorded in the debit side because we are paying, there is an outflow of the money, foreign exchange, and mobile phone is a good. So it will be debit side of the current account. Okay. Then capital account also has a debit and a credit side. Then debit records outflows of the foreign exchange and credit inflows of the foreign exchange. Now, if it is a purchase of financial asset, then it will be debit side of the capital account. Then if we are talking about loans or grants or foreign investments into the country, then it will be recorded on the credit side of the capital account. If there is some company that is investing in our country, or if it is we are getting loans from outside, then it will be credit side of the capital account. So that is how the question is asked. Now transaction of visible goods, that is goods, visible trade, is called as the balance of trade, which is equal to the value of export of goods minus the value of the import of goods. That means export means we earn, and import means there is an outflow of the foreign exchange. So in case the value of the export of goods is equal to the value of import, then it is a balanced trade. If the value of the export of goods is greater than the value of imports, then we have a surplus balance of trade. If the value of the export of goods is less than the value of the imports, then there is a trade deficit. And this trade deficit is a very, very important question, right? Now, why is it an important question? Because most of the time, 2 or 3 questions are asked based on this trade deficit. Now, a current account surplus would mean that the receipts are greater than payments of the visibles, invisibles, and the transfer payments. So, current account is a larger concept which includes the visible, that is goods, invisible services, as well as the transfer payments or unilateral transfers. In case of a current account surplus, the country becomes a lender to the rest of the world. So it can lend loans because it has a surplus. If there is a current account deficit, it would mean that the receipts are less than the payments. Since we are dealing with current account, again we talk about the visible goods, invisible services and the transfer payments. In case of the current account deficit, the country becomes a borrower from the rest of the world. So we need to take loans from the rest of the world. Now the questions that are asked here based on the current account deficit are: distinguish between the current account deficit and trade deficit. See, trade means only goods. Okay, so trade deficit is a smaller concept when compared to the current account deficit. Okay, and trade deficit deals only with trade in goods. That means value of the exports is uh, less than the value of the imports. Then it is called trade deficit. Whereas current account deficit would mean a total of the receipts or the visible, invisible and the transfer payments when it is lesser than the payments on the visible, invisible and the transfer payments. The other question that is asked is: trade deficit is of concern to a country. Is it true or false? Give reason. Trade deficit cannot be a concern because trade deficit is a part of current account deficit, and current account deficit is a broader concept when compared to trade deficit. So there are others also, no, there are invisibles and transfer payments also. So the invisibles and the transfer payments, the sum can be greater than that of the visibles. So then it might not be because of the trade deficit alone. So then the trade deficit would reduce, in fact. Or the other question, in other way it is asked as: trade deficit must exist if a country is facing a situation of current account deficit. Okay, so here also we need to write that current account deficit is a broader concept, and current account deficit occurs when foreign exchange payments on account of the visible, invisible, current transfers are in excess. That means it is more than the uh, receipts. Now let's revise capital account and the components. Capital account records all international transaction of assets. That's what we learned. The components being foreign investments like the FDI, foreign direct investments, or the portfolio investments. External borrowings, since these are called borrowings, we take loans. That means external commercial borrowings and short-term debts, etc. Then the third one is external assistance. Assistance means government aid or intergovernmental aids, loans. Okay, so they all come under external assistance. Now here also we can talk about the surplus in capital account, where capital inflows are greater than the capital outflows. And there is a deficit in capital account when capital inflows are less than the capital outflows. What does capital inflows include? It includes receipt of loans from abroad. Since we are talking about inflows, so receipt of loans means there is an inflow of the foreign exchange. Sale of assets and shares come under inflows. Then outflows includes repayment of loans, purchase of assets and shares in foreign countries. So here there is an outflow of the foreign exchange, so they will be included under the debit side. Okay. Then here what are important questions is difference between the balance of trade and the balance of payments. So balance of payment is a broader concept which includes the current account as well as the capital account, and balance of trade includes only the transactions in goods and only the goods, that is export and import of goods, visible items. However, there is a third account apart from the capital and the current account. Those which could not be included in the capital or the current account, they are included under this third account called the errors and omissions. So this is what is important under the balance of payments till now. So first we need to remember what are the components And next, what are the items that can be included under various heads, whether they are the debit side or the credit side, whether it is capital account or the current account. Then balance of trade and balance of payment.